want to watch it afterwards, you get an opportunity to watch it again. We do have two really fantastic panelists this morning. I wanted to welcome everybody, and as many of you have attended our Arizona real estate series in the past in person, we've decided to go to try the Zoom route to increase participation for people from all over the valley, and actually got people coming in from outside of Maricopa County. So very exciting to have people joining us today from all over the state. A lot of great things happening in the Phoenix market and surrounding areas. I want to take this opportunity to introduce our fantastic sponsors this morning, and I'll kick it off with Beth Klauser with Landmark Title. We couldn't do this event without our great partners at the title company.
Well, good morning, everybody, and thank you for joining us this morning. I do want to start with a quick shout out to Stacy, because really we wouldn't even be having the real estate event series if it wasn't for Stacy. It was her brainchild, and we're so honored to have the guest speakers we have today who are going to share their wealth of knowledge with all of us and keep us in the know in the industry. I just want you to know our shout out for Landmark Title is we truly care about the real estate industry. We care about keeping the knowledge level up and the professionalism up. And that's why we were so honored to be part of the team and sponsoring this class. All of our teammates here, Kimberly, Lisa, Sarah, and of course, Stacy, we've all worked really hard together to promote the event and make sure it's of value to all of the agents. So I want to thank my team too. But just know at Landmark, we're throughout the valley. We all have a very high work ethic. I work with the best team. And no matter what office you work with, whoever your escrow officer is, or your sales, or your business development manager, we're all here to help you lift you to another higher level of success. So reach out to us. We are always here for you, and we are your partners in this business.
And I concur. They're great to work with. Thank you,
Stacey.
Kimberly with Old Republic Home Protection.
Hi, everybody. It's nice to be here. And I do want to second that and say thank you, Stacy. And then I'm really excited for Thomas and Keith to share their knowledge with us. We really appreciate you giving us some of your time. I'd love to just talk a little bit about Old Republic. There's so much skepticism in the world right now. I think all of us are walking around with one eyebrow half cocked all the time. Even when we hear good news, we're like, what's the catch? One of the most popular questions I get from agents that I have not done business with before is, do you guys really pay claims? Do you really replace air conditioning units? And I just want to tell you that absolutely, yes, we do. Old Republic is coming up on its 50th anniversary. And last year alone, we did pay out $174 million in claims. So yes, we do pay our claims. And just to kind of back that up a little bit, and then I'll move on, is I get these service cards all the time that report back to me what's going on in my territory in terms of service requests. And so just for example, here's a $2,000 under slab plumbing leak situation that was addressed. $2,000 there. Here's an appliance washer, $1,099. Here is a water heater, code violations corrected and replacement, $1,270. And the last one, this is an air conditioning claim, $1,364. And on this plan alone, we have already exceeded $3,600 in paid out claims. So yes, we do pay our claims. I can't stress how important putting that home warranty on your transaction is. It stays with your client for a year after you're gone and protects their budget and reduces your risk. So I really appreciate you guys having me here, and I look forward to this information.
Great, thank you, Kim. And next, Lisa with Advantage Home Inspection.
Hello, everyone. I'm sorry for my scratchy throat. Hopefully I won't end in a coughing fit, but I wanted to thank my team for all their efforts in putting this together. And of course, the panelists. Get ready to jot down as many notes and things that you can apply to your business and then pass on to your clients, because it's going to be great information. Advantage Inspection Service is the largest home inspection company in the Valley. We have a team of 25 home inspectors. The great news for you and your clients is that means you can get in quickly. oftentimes I hear agents say, wow, I was able to get, an inspection in 1 or 2 days. That really helps you and your clients to get, if you need to get a further quote or a bid on anything that you want to put in your, in the BINSR. So please reach out to us. We do inspections every day of the week. We've been in the Valley for 34 years, and we're really proud of all of those statistics. So give me a call. I'll be reaching out to you after the seminar as well.
Great. Thank you, Lisa. And just want to share with you, our nation's team is on the call today throughout throughout the Valley and in our Prescott branch that we have. We are in all 50 states. So that makes it great. Obviously, Nations Lending is committed to provide really the premier when it comes to products. We have had so many changes in the mortgage industry, especially over the last year, but there's actually been some good stuff that's coming out. FHA has dropped the mortgage insurance premium. We just got notification that VA is dropping the funding fee. That's the kind of thing that will make a big difference. And I know it sounds crazy. You hear bad news all the time, like Kim was saying on the news. Rates have been improving, and I think we're going to continue to see improvements throughout the end of the year. So hang in there. What I'm telling the clients now is buy the house because you're going to lock in the purchase price. We can always refinance. And that sometimes people don't understand that or think that they have to, that once they buy the house, they're stuck with the rate. So no, we want to make sure that we get them into the right house, give them the right opportunities. So please think of Nations Lending in your next transaction, and encourage you to reach out to my team. All right, let's jump into our panel and our program today. I'm going to take an opportunity to do a quick introduction of our panelists. And Keith, I'm going to start with you. Keith Mishkin is the CEO and President Designated Broker of Cambrigde Properties. He founded Cambrigde back in 1994 and is recognized as one of the premier brokers for luxury residential living in Scottsdale and Phoenix market. Most notably, since 2003, Cambrigde Properties has closed over $2 billion in new home sales of urban lifestyle developments, as well as single-family homes in the Metro Phoenix area. Keith directly oversees all aspects of sales and marketing of the community from inceptions through completion. He is a wealth of knowledge. With nearly 10,000 homes sold at all price points. Notable experience includes the residence at 2211 Camelback Esplanade Place, across from the Biltmore Fashion Park, Monte Lucia in the Paradise Valley area, and 2 Biltmore Estates. In addition to award-winning new home sales division, Cambrigde Properties has a boutique resale and investment division with several of the top sales professionals in the market today. Keith is also an active real estate investor, having personally invested in over 300 transactions ranging from individual homes to large unimproved parcels to hotels, offices, and apartments. Again, that just a wealth of information and knowledge. Keith has received several distinguished awards and recognition throughout his career, including Phoenix Business Journal Top 5 Sales Professionals in Arizona, Top 10 Career Sales Associates Award from Central Arizona Home Builders Association, the Phoenix Association of Realtors Lifetime President's Roundtable Award, and the Carl A. Williams Lifetime Achievement Award from the Central Arizona Home Builders Association. Also a top producer in the Valley for new homes as determined by the Central Arizona Home Builders Association and the MAME Salesperson of the Year. Keith is a proud alumnus of the Barrett Honors College at ASU with a degree in economics. Welcome, Keith. We're thrilled to have you on our panel this morning. We've also got Thomas Maynard with the Greater Phoenix Economic Council. And I'm gonna have Thomas, at some point I'm gonna have you talk a little bit about the Greater Phoenix Economic Council also, but he is a Senior Vice President of Business Development, has been with the Greater Phoenix Economic Council since starting as an intern in August of 2013. Thomas co-manages the business development team and oversees GPEC international business attraction efforts. Over the years, Thomas has worked with hundreds of companies evaluating Greater Phoenix, ranging from Fortune 500s to startups. And as I'm sure a lot of our people on the call today have seen, we've seen incredible growth in the Phoenix metropolitan area. Thomas was named for the to the 2020 list of North America's top 50 economic developers and was recognized as a 40 under 40 economic developers class of 2021. Thomas is an Arizona native, grew up in Tucson, graduated from Arizona State University with a degree in journalism and a focus in public relations. Welcome, Thomas. We are excited to have you join our panel this morning. Well, I'm going to kick it off, Thomas, with you. We're going to open this up for questions. If you do have questions, everyone, please don't hesitate to put them in the chat. As Beth mentioned, throughout the program this morning, Sarah's going to be monitoring the chat and question and answer tabs, and we'll piggyback off the from what our presenters. So if you do have a question, please don't hesitate to put something in there for us to be able to expound on for you. So Thomas, tell us a little bit. So not everybody is familiar with the Greater Phoenix Economic Council. Can you share with us your mission, please?
Sure, happy to, and thank you for the opportunity. It's really my pleasure to be here, and happy to join the conversation. So, yeah, Greater Phoenix Economic Council, GPEC for short. We are the regional economic development organization that represents the entire Phoenix metropolitan area. It's about 5 million people. Wickenburg down to Casa Grande, big cities, small cities, everything in between. And our mission and function is to help grow the economic base of metropolitan Phoenix, and that's primarily through business attraction. And that's the role that I play, is to help recruit companies to the Phoenix area. I'm happy to chat more about kind of what we're seeing and what types of companies are moving here. The good news is we're staying extremely busy, as you all probably know. And we also have a function to advocate for the competitiveness of our region, which allows us to play in things like affordability, water policy, which I know we're going to be talking about. Anything that's going to impact our competitiveness as a region, or positively or negatively, we want a seat at that table to make sure that Metro Phoenix continues to grow, continues to diversify our economic base, and again, ultimately, hopefully, Arizona can be really a market of the future. And I know we're definitely on that path.
Great, thank you. Yes, and so we'll lead right into a little bit more. I mean, when you look at Arizona, and I've been here since the mid '80s. When you look at Arizona, when I first came out, it's very tourist driven, right? That was our, it was crickets here come June, July, and August, right? And now you see huge developments going in. TSMC is, that's going to be massive, right? So we've seen so many different projects coming in the valley. Do you want to talk and expand about that transition from being a tourist driven? I mean, we still have the tourist segment, but more development that's come into the valley.
Yeah, absolutely. And you're 100% right. We've really transitioned and matured as a market, and tourism still is a great industry, and a key reason why there's a lot of people here and a lot of investment here. But we're really becoming a region that is known for advanced manufacturing, innovation economy. Not only a place to where our business development pitch probably 15, 20 years ago was come to Arizona because it's cheap. Now, although we're still way more, competitive than, the Bay Area and LA and New York and Boston and Chicago and all these other markets, that is really not our sales pitch of come to Arizona because it's cheap. We're saying come to Arizona because we're a fast growing market. We have a great labor and talent pool and story. So when companies are looking to make their location decision, usually what's number one on their list is where are we going to find people and talent. So not only do we have the great university system, bolstered by ASU, but I saw a comment in the chat, go Cats. I mean, U of A down in Tucson is doing great things. NAU, GCU is no longer, kind of the underdog in the West Valley. GCU is on the map, and a lot of people know about GCU. So from a talent perspective, we're probably one of the top markets in the US. And then on top of that, we have people moving here. So when companies are really making that decision, that is a key part of, hey, we're a fast growing market. Maricopa County was the fastest growing county from 2010 to 2020. So that's a huge value add for us when we're recruiting companies. And then the types of companies that we're seeing is definitely, Emmy Rodel, I saw that. Yep. There's really, there's, a countless number. The community college is another one, that there's 10 community colleges that make up Maricopa Community College District, which is a huge, input for us when we're trying to talk to companies. But yeah, the types of companies that we're seeing, semiconductor manufacturing continues to be a huge driver. The TSMC announcement, it's hard to understate. And Stacy, you're referencing that, how big of a deal that is. So it's a $40 billion investment. They're just getting started on their first 2 fabs. For context, Intel down in Chandler, they just announced a $20 billion investment to get to 2 additional fabs. So they have 6 fabs there in Chandler. TSMC has 2, but they have room to grow to 6. Now that may not be tomorrow, it may not even be at the end of this decade, but maybe a long-term strategy for them. But again, not to understate how big of a deal that is, and we're just getting started on that. In addition to semiconductors, it's automotive, it's battery supply chain. You probably all saw last week the LG announcement in Queen Creek. So Arizona is really, we're on the map both domestically and at an international scale. I'm happy to kind of chat more about that, but it used to be we'd have to explain, here's Arizona, here's California, here's Texas, we're right in the middle. And now, or people come to us, say, Arizona, that's where the Grand Canyon is. And like, yes, that is where the Grand Canyon is, but there's much more to Arizona than the Grand Canyon. So we're definitely on the map, and it's a great opportunity for us to take advantage of.
Fabulous. Yes, we're going to come back to some more questions, Thomas, in regards to the development here. Keith, just kind of now, you really have your finger on the pulse when it comes to all things real estate, right? From builders to land development to resale. Share with us your insights in regards to what you're seeing and hearing from specific, maybe start with the developers and where they're headed.
So, it's a lot of it is determined by price point and value. There's, as Thomas alluded to, and, there's so many reasons why people are moving to Arizona. And, the job growth is obviously incredible and insane. And what GPAC has done has been just really, really profound. And it's such a great organization and such a great economic driver for Arizona. So we have all these great economic drivers, and then we have all the other reasons that everybody's coming here anyway, and frankly have been for the last 30 years. And, we generally have 110,000 net in migration every single year. And that net 110,000 new people, in net, that's going to, require somewhere, at about 3.1 people per household, that's going to require 30-some thousand households every single year. So the great news and some of the differences as to what happened in 2007 and 8 was, we started to overbuild. But because of supply chain issues and other things, and then the lessons that we learned from that, we didn't overbuild. So we do not have an oversupply at this juncture. And for those of you that are smart enough to listen to Tina Tambor with Cromford Report and all of her updates, we're in a very healthy market right now. So it feels like, a disaster compared to, I get a listing and I get 20 offers, but like that's not sustainable, and nor is that enjoyable, and nor is that, good for the market. We are in a market that's in complete balance right now with supply and demand. And, fortunately, having started in January of 1990 in real estate, generally, this is very, very similar to, I lived through the great RTC debacle in 1990, and then got to see a very healthy market for many years, where we had about just over a 3% growth, and the market would go like this, but it was constantly, when you look at the trend line, it was it was just over 3%. I think it was 3.4. And, but then, of course, we have this moment in time where it went like this in 2007 and 8, and then we overcorrected. And now we're back to that trend line. So the trend line is still at that 3.4%. And I think we're in a very, very healthy market. I'm actually very grateful for what's gone on in here. That being said, there's a lot of change that's occurred in, particularly in the lower price point. And we're fortunate that I study the lower price point. I play mostly in a higher price point in the urban markets. And it's but I'm very acutely aware of what's going on in different price points, and especially because I do a lot of investing. So I like the land side of that, and it all plays into, at the end of the day, you can only afford to pay so much for the land because they can only sell the homes for so much. So what's going on with these buyers? The buyers, most of the buyers in the lower price point, they don't really care what they're paying. They do, it's important to them. They care about their monthly payment. So if interest rates have doubled, which Stacy, now they're coming back down. Thank you, all due to Stacy. And and if they're coming back down, then that's really, really helpful. But they're saying, hey, I can afford $2,000 a month. What will that buy me? So an interesting trend I'm seeing on the lower price point right now is the builders have been really trying to hold their pricing. And instead, what they've been doing is we'll hold our pricing, and we know that the pricing should be down, $40,000 or $60,000, or 10 to 15%. And they know that they should be that, but they said, what if we actually just went ahead and bought down the mortgage? And so we paid a bunch of points and really got that interest rate lower so that they could still afford that. So in some respects, they've been propping that up. And I'm starting to see a couple of cracks in the dam where they're saying, I want to move a little bit of our standing inventory. And so I've been seeing a couple of deals out there anecdotally, and that's a little bit of a concern. But again, you still have 110,000 net in migration. We need 35 households, 35,000 households, and we're only, and we're building, we'll probably build 20,000 this year. So, that's going to keep our market healthy and normal, in that going forward. And then along those lines, Stacy, the upper end has been sustaining. And I'm seeing no break in that at all.
And you're absolutely right. I mean, on occasion I'll have a conversation with a buyer that says, "Oh, I'm waiting for the big correction. I'm waiting. It's not coming. There are more household formation. We're not keeping up on the supply." And to your point, at some price points, we're seeing back to bidding wars where we've seen buyers lose out on homes because there were multiple offers. So a little unique in the Arizona market, I think, compared to when I talked to some of my associates across the country. But we're still, I think, one of the hottest markets, if not the hottest market in the country right now, from a lot of perspectives. So Thomas, I'm going to volley back to you, because one of the questions in the chat kind of leads to that what Keith was talking about is what new companies are slated to come out here and create or relocate their headquarters. And I know that in some cases they're vetting different locations, but any insights that you can share are going to be helpful. Thank you, Vicki.
Yeah, thanks for the question. So yeah, we're tracking about 220 active companies that are evaluating Metro Phoenix in various different stages of evaluation. Some are very early stages, kind of kicking the tires. Maybe Metro Phoenix is up against 5 or 6 different markets, to others that are kind of negotiating land sale or leasing a building or what have you. I would say the majority of that pipeline, probably 75 to 80%, are industrial projects. So manufacturers, distribution centers. There's a lot, as you would imagine, supply chain to directly support both TSMC and Intel. So these range from chemical manufacturers to people who make the machines that go into the fabs, and really, I mean, there's about 40 companies just kind of in that world that we're working with. So it tends to be a lot of that. Now, industrial doesn't necessarily just mean kind of minimum wage warehouse worker type requirements. Especially these manufacturing related. These are very skilled positions. Some require degrees. Others don't require degrees, but need a professional certification. So these are well-paying jobs. and they're looking all over the market, East Valley, West Valley, even down in Pinal County. The office use case, of regional headquarters, kind of big back office type functions, we are seeing those, but they're fewer and far between, unfortunately. COVID is obviously having a big reason to do that. I mean, even look at us right now. This is a Zoom call. This is not an in-person meeting. I think we're used to the convenience of working in a virtual environment. Therefore, that the office space that world is going through kind of a transition now, and corporate America is trying to figure out what are we doing with our office space. What we've learned in conferences that we've gone to and kind of clients that we're talking to, it's going to be probably somewhere in the middle between hey, we're Monday through Friday, 9 to 5 in the office, butts and seats every single day, to the 100% virtual. Everybody is, just all you need is a laptop and internet connection, and that's our office, because we both are not really working. The total virtual, 100% remote, hard to really develop culture, hard to coach, hard to mentor, kind of that next workforce. So we think that kind of hybrid model is definitely going to be the path forward in the next, in the short term, next 1 to 5 years, and then who knows what happens after that. But pre-COVID, we would be about a 60-40 split, 60% industrial, 40% office. And like I mentioned, we're now 80-20, probably closer to 80-20. So those regional kind of back office type functions probably today are maybe mostly remote. But hopefully that comes back, because there's a lot of Class A office space in town that needs to get leased up at some point. But I think we'll definitely see a transition on that.
We had a question in the chat, Thomas, in regards to these companies. Where are they coming from? Are they coming from California? Where are you seeing them coming from, or that level of interest?
Yeah, another great question. Historically, California is always our number one market, as you would imagine. It's a lot of, hey, this is a high cost environment. We don't want to be in California, but we want to be really close by. And even if the company's not headquartered in California, they're kind of looking at the West Coast for that exact reason. Hey, all of the customer base is in California. We don't really want to be there from not only a cost perspective, but a regulatory environment. California is not a business friendly state. Arizona is. So usually that almost moves the needle just as much as the overall cost of doing business, taxation, real estate costs, all of that. Today we're probably sitting at probably closer to 10 to 15% is California based. And what's funny, or what's interesting, is we're at 22% of our total pipeline is international, which is the highest it's ever been. So international actually surpassed California from an origin standpoint in our last year. Again, not a huge surprise. TSMC gave us a roster of, hey, here's all these companies that are now wanting to be here. So that was easy for us. We're like, hey, let's, we didn't have to make the hard sales pitch. We were asking them, where do you want to be? Not all of them were international, but there was a lot of Asian, based companies there. And with LG, they're South Korean. We're just scratching the surface on that. We're hoping, they send us their supply chain, because a lot of those groups want to be somewhere close by. Maybe they don't need to be right there on the campus, but anywhere within an hour. So we're going to see different parts of the valley that are going to, see an increase on that. But yeah, international, we're becoming a bigger player on that. There's a big international conference that's going to be in Washington, D.C. At the first part of May. So we're going to have a big presence there. Because again, like I mentioned earlier in the opening comments, we're on the map. So now the onus is on us to make sure that we get as many of these opportunities as possible.
Well, I think a lot of times people get to the Phoenix and anywhere in Arizona, and they're surprised at what they see. The perception is, oh, this is just a flat, there's nothing here. And then they come and you usually hear the feedback like, I had no idea, yes, our summers are hot, but for the most part, our weather's phenomenal here, right? No, we don't have hurricanes and tornadoes, right? So that makes a big difference from an employer standpoint. I want to pivot a little bit, and I'm going to ask Keith this question first, and I also want to hear your feedback, Thomas. You mentioned water. Water, definitely always comes up in the conversations in regards to our growth. And Keith, I'm curious from your perspective as being a developer, and what do you hear in the field in regards to water? Do you hear concerns from developers? I mean, I know that they have to have certain things in place before they can just build a property, build out a subdivision, right, from a water standpoint. But maybe you could shed some light on, anything in regards to water issues.
Yeah, so you cannot get a public report without having a 100-year water supply, assured water supply. So any of the new communities that you're going to, they have a 100-year assured water supply. That being said, water is certainly an issue, and it's on everybody's mind. I will say for any of the people on this call, my brother ran for the water board for Maricopa County. That's Corey Mishkin, and he's actually done a lot of guest speaking. And if I'd known that question was there, I would have made sure he was here to talk about that for a moment. He's an expert. He's incredible, and he'll go to your office and do that. He loves it. He's very passionate about it. That being said, I think that Arizona is actually really well positioned. Thank God we've had some of the snows and the rains and things like that we had. We really just are recharging that aquifer right now, and I couldn't be more grateful as just a citizen of the country, to see of the world to see that, and so. I'm that has promise. That being said, we need to be insanely mindful of that going forward. And you're already starting to see certain areas that are positioning for, we're going to be protective of our water. So all of you have heard about Scottsdale and Rio Verde, that's in some of the areas of that where Scottsdale say, hey, we're not going to serve you. And some of the other areas up north in Cave Creek, for example, some of their underground water is brackish. And so they have to take in potable water, from other places. And, I think it's makes them a little more vulnerable. And that being said, too, they're also being smart to say, we're not going to allow, we're not going to allow a lot of rapid development out there. We're going to be very mindful how we go forward and the number of projects that we allow and the density that we allow. So certain areas density is phenomenal, and other areas, they want to be careful about that. Scottsdale also, it was very interesting. We just saw the first ever approved project in Optima's new project that's going to be north of Kierland, right along the 101, close to our project, Portico condominiums that we're doing it at One Scottsdale. But Optima just got they had to bring in additional water supply to support the density that they were doing, and it was very intuitive of that developer to take that approach to kind of check the mark for the city council and say, hey, they're bringing in more water. Yes, they're going to be using more water, but that keeps us at a net zero. So we see that particularly out in California, everything has to be net zero, net zero, net zero. So I don't see that happening here yet, but I will see that, we'll see more and more of that.
Good. Thank you. I appreciate that. Thomas, from a development standpoint, I'm sure water comes up as a question when you're talking to potential companies that are looking to come to the valley or anywhere near Arizona, but coming in, what are you hearing and how are you addressing those questions?
I'm sorry, go ahead.
No, go ahead, Keith.
No, please, you go.
Yeah, I would say water comes up almost on a daily basis from our perspective. And unfortunately, I think the default of people who are not in Arizona or not familiar with our water position, the default kind of point of view is Arizona and the greater kind of Western United States does not have any water or is running out of water. So we do this on a daily basis. So I have to kind of go through it. The real answer is it's a complicated process. But what's the key to understand is we have multiple sources of where we get our water from. So Colorado River, which services 7 different states in the United States, plus Mexico, makes up about 36% of where Arizona gets our water from. That's what's in the news. You can Google Lake Mead, Lake Powell water levels. That's where you see a lot of the negative press. There's two things that are really driving the drop in those water levels. Number one, we're in a historic 20-year drought. Climate change turns out is a real thing, and that's really impacting kind of how we are getting our new water sources. Luckily, this year has been a really good year, so I think that those levels are definitely going to go up this year, which is good news. The other component to that is the Colorado River was never meant to service all of the people that live in the Colorado River Basin. We're oversubscribed. There's 50 million people that live kind of in the area, the service territory, if you will, of Colorado River, and it was never meant to do that. So there's going to have to be long-term solutions to figure this out. Part of that is going to be just natural development as agricultural gets converted into other uses, including commercial and residential. That water use definitely goes down. And then kind of the future, whether this is 5, 10, 20 years down the road, desalination, creative solutions like that. But again, going back to that first talking point, only 36% of where we get our water is Colorado River. So is it an issue? Yes, but is it the end all be all? No. The other two major sources of where we get our water is underground. There's a lot of underground storage, underground aquifers that we pump water up via wells. We have very strict rules. You can't just build your own well and pump water. We've been doing this for a while. We know we live in a desert. Water is a precious resource. And then the third is SRP, which a lot of people here, even in Arizona, SRP, that's the power company, right? SRP started as a water company. Lake Roosevelt, named after Teddy Roosevelt, that was the first Bureau of Reclamation project in the United States to build a dam to control those water resources that go into the greater Phoenix area. I Googled it, or I looked it up this morning from SRP's website. You can look it up. The SRP system is 100% full. So if you're driving around town, you've probably seen the Salt River, by the airport or wherever you go in, and you pass by the Salt River, you'll see water running through it. The reason being is they have to release water upstream into the Salt River because Lake Roosevelt, Lake Saguaro, all of those lakes up there kind of in the Northeast are 100% capacity. The good news for Arizona on that is just Arizona's water. We don't share that with anybody else. So we kind of control our own destiny on that sense. So, it took me probably 5 minutes to walk through a brief history on that. People in Arizona, or not from Arizona, are definitely don't know that. And they're just going to read that headline and they're going to see, hey, Arizona doesn't have any water. We're going to move on. So what our main priority right now is to talk to companies, to site selection consultants, to others that are advising these companies to say, hey, water is a big deal in Arizona. It always has been. We live in a desert. This isn't something that's new, but don't count us out, from a project. Let us actually, have a conversation and see what we can do. And more often than not, our cities can service the water requirements for these big users. The last thing that I'll mention, it's very much a local issue. Every city has a different story. Every city has a different way of where they access their water. And to be candid, some are in a much better spot than others. If you're totally reliant or more reliant on Central Arizona Project to get water from Colorado River, there's obviously a higher risk there. If you are, served by all three, groundwater, CIP water, and SRP, the redundancy of sources, will definitely help out. So anyway, we're more than open and willing to talk to these high water users. And if they're looking at our market and they have a high economic impact, we'd love to see them here. So I'll pause there. There might be some additional questions, but our water story is much better than what you may think in the national media.
Agree. Well, and I'm going to volley back to Keith, and then Keith, I'm going to come to your question. But Keith, there's a question in the Q&A about what do you see Q2, 3, 4 really for the rest of the year for new build? How aggressive are the builders? Are they being more conservative? What's your feeling in regards to the builder temperament right now?
I think that builders are nervous about standing inventory. So, they want to have the right amount. They know that, they know how many sales they're going to have per month in general. And so, you know, they've lost some contracts along the way with cancellations, you know, as the interest rates had risen and people were not able to afford the new payment. They did a great job. The builders really did a great job here with being forward thinking and buying, you know, buying down the loans and buying portfolios of forward advanced, you know, loan rates, you know. So I know a couple of them, you know, that bought like $2 billion worth of loans to be able to support their future sales. And so now they've delivered most of that product. So the ones that are there that they've had the starts, and you know, certain builders they deal in specs, and they're you know, they have a whole organization that they've geared up for. They want to know that everybody's just, you know, they'll shrink their margins, but they still want to keep and retain everybody because it's hard to hire right now. You know, or actually it's been incredibly hard to hire. So that being said, I think we have a little more inventory. It's not super high, but we do have some more inventory. And anecdotally, I just saw, you know, one of our agents was just telling me they were, you know, they were taking their client around to new home communities, and they weren't afraid to be a very strong buyer broker. And, you know, the agents are all saying, no, we don't negotiate our price. We don't negotiate our price. We don't negotiate a price. Anyway, they negotiated their price. And what they did was they went and they talked to one of the neighbors, being a great buyer's agent. They drove around, say, hey, I see you're moving in here. Oh, hey, did you close? And how much did you pay? And, you know, they were offering one price in the sales center, and they have all these incentives. Well, this buyer was cash, and they found out that buyer bought it at a much lower price per foot. And they went back in and they were able to negotiate. Basically, it was I was shocked. It was over 10% off of the price. Wow. You know, from that. And this is with an agent saying, you know, the on-site sales agent saying no. It's the problem is once they break the dam and they start doing that, and then all of a sudden you see these new comps. So Stacy, you know this better than anybody, you know, that now the appraiser is going to come and say, oh, that's the new comp. And so then you create these self-fulfilling prophecies of that creates some downward pressure on price. But because they're still doing a lot of these loan, you know, programs and incentive programs there where they're throwing in a lot of upgrades and stuff like that, you know, it'll still keep these prices kind of propped up. And again, we have this Arizona, different than other markets, has this incredible, genuine demand of people that are moving here. So because of that, and because we don't have an abundance of supply, I don't see that falling out underneath. And even when you see other news in the national market, you know, in the national news of things really coming down, I'm not going to see that here. I don't believe we'll see that here. And I think that we've already seen it's been a very, very soft landing for that. So and again, though, on the upper end, I'm seeing zero break in that whatsoever. Not only am I seeing zero break, but, you know, at Portico condominiums, we just hit our pre-sale requirement. We're breaking ground next month, and we're raising prices. So, you know, we rewarded people, the early adapters, and now we're, you know, doing that because we have such great demand for it. We also started a little bit lower in the market, you know, to be able to build that momentum. But when I look at some of the other great urban communities that are selling right now as well, they're big, big numbers. And then I go and I say, gosh, these numbers are really high, very strong numbers. But then I go back and I track a bunch of the luxury resale. And I'm always looking at it. If anybody ever wanted to, I'm happy to send you. Every month I track the urban comps and of what's happening in the resale markets. And, you know, in the resale market, we're at $725 a foot for luxury sales in urban. So, you know, places like a Scottsdale Waterfront, Esplanade, Optima Kierland, you know, Optima Camel View, you know, the Envy condominiums, Enclave at the Borgata, the Village at Mountain Shadows, you know, and these are all just resales, you know, that I'm looking at and that I track, you know, to see, you know, what's going on there. So it shows me trends, and I'm seeing zero break in that momentum whatsoever in both resale and in new homes.
All right, thank you. So Keith had a question for you, Thomas, in regards to incentives for companies to relocate or moving them here regardless. You know, what are you seeing? Is the city offering different things to help get more businesses here? Is that kind of the gist, Keith, of the question?
Yeah, there are incentives available. They're primarily driven by the state. So the state will look at 3 inputs: number of jobs, average salary, and capital investment. And based on these inputs, there's a variety of different incentives that companies can qualify for. They're meant to be kind of the cherry on top. You know, we're not going to be the strongest incentive state, or we're not going to have the highest incentive because one, there's a lot of other, you know, assets that we have. A great, like I mentioned earlier, great university system. People are moving here. You know, so there's other markets that may give free land or may be able to really buy a project, and that's usually not going to happen in Arizona. But we are, I would say, competitive with our incentive package. But yeah, that's mostly driven, you know, at the state level.
Okay.
And I think there's a question on in the Q&A about Casa Grande. Happy to touch on that.
Yeah. Do you want to talk a little bit about Pinal County? I mean, I know I too have heard so much that's going on in Pinal County, and you know, Casa Grande is not that far away anymore. I mean, right. So yeah, do you want to share with us?
Yeah, happy to. It's really incredible what's happening down there, and that's really one of the areas where there's we think there's going to be a lot of opportunity and growth. So years ago, this is probably maybe close to 10 years ago at this point, Tractor Supply Company put a distribution center down there in Casa Grande, and people were saying at that time, wow, that's kind of, you're making a bet, that's way out there. How are they going to recruit? How are we going to hire people? And since then, Lucid Motors, there's a couple of semiconductor supply chain companies there. Kohler, most recently Procter & Gamble made an announcement over in Coolidge. There is a lot of activity and more coming for Pinal County. The reason being, land prices are a little bit more affordable. It's cheaper than the Phoenix metro area. There's also rail lines and natural gas lines. So from an infrastructure standpoint, it's well positioned. And then two, from the labor perspective, which is probably their biggest Achilles heel, one, Casa Grande's growing like crazy. The city of Maricopa is continuing to grow very rapidly. And today, almost probably 95% of the population, working age population in Maricopa, has to drive somewhere else to work. Unless you're working at a fast food, you know, or kind of retail type operation, they're going into, you know, the East Valley, Chandler, Gilbert to work, or they're going, you know, further into Pinal County. So that's a captive kind of audience and opportunity for the city of Maricopa. My guess is they're going to win an employer here in the near future, where we represent them. We're working very closely with them. But yeah, it's definitely an attractive market, and going to continue to see their wins for people that maybe don't want to pay that price point in the core Metro Phoenix.
Thomas, I want to piggyback off of Keith's feedback on housing and GPEC regarding your feedback, involvement in affordable housing or housing just in general, because I'm sure you're hearing from prospective employers too, where are we going to put these employees, or right, where are they going to live? You want any feedback for us in regards to that?
Yeah, that's kind of it's the double-edged sword, right? You have all this economic growth and momentum, and people want to move here, which is great. But if we can't keep up on the housing stock, you know, that's where we get, you know, the little bit of the inflation on the price perspective. So if we look at our overall cost of living index as a region, Metro Phoenix is about 5% over the national average. We've always been right at the national average or a little bit lower. But what's really driving that housing cost is 20% over the national average. And that's, as Keith was referencing, you know, probably more so as a function of supply and demand. You know, yes, we are not overbuilding, which is great. But you can almost make the argument that we may be slightly underbuilding, and a lot of that maybe not the market, it's just supply chain. We can't build houses fast enough. We can't get the labor, the construction labor to physically build our product. So that is getting better, and I think it'll level out. Our kind of overall median home price growth had a huge peak in 2021, 2022. Now we're leveling off a little bit, which is great, because that would be an unsustainable kind of way to grow, is if, hey, we're building all these houses, but if that price point to where our jobs can align, that would be an issue. Now, the good news on all of this, our average wage, median wage is continuing to grow. So median wage for Maricopa County is at 46,000. That's up from probably 37, 38,000 even 4 or 5 years ago. So wage levels are definitely increasing, and it's a constant struggle to kind of match having nice, well-paying jobs here, and then also the home market. But there's definitely opportunities there. Multifamily continues to see a lot of development and a lot of growth. There's been a nice year-over-year uptick on the multifamily growth, which you all probably know better than we do. So it's just making sure that we get more and more product, because the people are coming, so we need to make sure that they have places to live. That's kind of the big challenge, one of the big challenges that we as a market are tackling right now.
Thomas, I'm going to throw you a curveball here. I know this was not something that you and I talked about in regards to the roads, and Keith, I think you probably have some insight on this also. We're seeing I-17 being expanded, right, to have that reverse lane concept up to Flagstaff, really to help alleviate a lot of traffic on the weekends. Single lanes still, there's a section between Phoenix and Casa Grande and Maricopa. I mean, are we, the Valley has been very thoughtful in regards to their approach in developing our freeway system. Any insights on that? And again, both of you, any feedback would be great.
Well, it's very timely, because there's legislation going right now down at the Capitol for what's called the Prop 400E, the extension of Prop 400, which is the Maricopa County level tax that we all voted on decades ago, to have a funding mechanism to support all of these transportation options. That's why we have the 101, the 202, the 303. To be candid, that's why Phoenix looks different than Tucson. Phoenix said, hey, no, we want, I should say more accurately, Maricopa County said, we want to have all of these, transportation and freeway options, and including light rail. So we raised our hand. There's an additional tax that we were paying. That tax is coming up. So in a kind of a quirk, we have to get permission from the state legislature to put that ballot initiative on the county ballot for our voters to approve that. So that is coming down. There's arguments that are happening now. God love our state legislators. They always have to argue about something. But the goal is hopefully we will see that on the ballot, and there'll be a big initiative and push from a lot of different groups, including GPAC, to say, hey, we want to continue to see economic growth. We need transportation to support that. So that Prop 400 is going to be a key driver, in our opinion, to see that continued growth.
Yeah.
Great. Keith, we've got a couple of questions in the chat for you. Curious, so the question is in regards to investing in condos and small single-family residence for those who want to buy rental properties, areas to look at. What are your thoughts in regards to that?
So actually, first thing I did want to say, I just want to show my key to my Lucid supporting Arizona, and I love it. I love it. On a so investing in, and I invest a lot, and I have a lot of rentals, and I love condos, and but I have a number of condos, but I also I think that my return on investment in general, if I'm just looking at general cash flow, I've done better in single family homes. And, my appreciation in condos have been fantastic. But I try not to invest for appreciation. I try to, me personally, my strategy and my, my holding company that owns a number of other little companies, is called Turtle Investments. Slow, steady, and, try to win the race. I have my turtle couplings, and so I think that, the challenge in condos from a cash flow. So I always look at it first to say cash flow, cash flow, cash flow. And then over time, I'm going to do incredibly well on appreciation, because we talked about earlier that 3.4% trend line, as it goes, the market goes up and down. If I'm a long-term player, then it doesn't matter. I'm still going to make that as well. So I don't, I don't look at it as a daily trading type of thing. I look at it very long term. So when you have a condominium, you also happen to have the HOA, and so you got to add HOA. You have to add taxes. So you got to be mindful where you invest as well. Certain areas have higher taxes too. So it all comes down to your cash flow. And I have certain strategies on that, and always happy to talk about that. The strategies, because I've done incredibly well in investing in properties long-term for cash flow. The other thing with single family homes, depending on the subdivision that you're at, it gives you some other flexibility to do short-term rentals if you wanted to. I've never really played in that market, but in condominiums, it's insanely rare that you're able to do a short-term rental. So, you're focused on that. We've also grown and matured as a marketplace as to what people can pay for rentals. And as we went through COVID and just before COVID, I saw appreciation of more than 50% in rental prices. So that's something that affects Thomas and GPEC, in their affordability. But all of our rentals, like I finally let go and let a management company handle a lot of my rentals, and they increased the prices a lot. Much, and I had a lot of mixed feelings about that, but that's just where the market is.
So we're down to just the last couple of minutes, but before we part, I really wanted to ask both of you, just kind of in general, what do you see on the horizon in the next 3 to 5 years? If we're not going to hold you to it, but if you're looking in your crystal ball and you say, hey, and Thomas, maybe you want to kick it off. Here's what I see in the next 3 to 5 years coming. Any insights?
Yeah, I would say very optimistic and very positive on the outlook of the greater Phoenix area. What I really think is we're obviously, everybody's tied to the national economy, but even if the national economy takes a downturn, it's not going to be 2008 all over again. We're a much more diversified economy. We're a much more resilient economy that even if there is a national downturn, we're in a much better, much stronger position. So very optimistic, and still there's been a lot of announcements, which is great, and we all love to celebrate, but still a lot of runway to grow. So just briefly, Northeast Valley, Surprise, Buckeye, those markets, and then Southeast Valley, crazy enough, Chandler and Gilbert almost getting built out. So the next frontier is Mesa, Queen Creek, and then of course we talked about Pinal County. So still plenty of room to grow, and very optimistic about the future.
Yeah, and Thomas, don't forget about Buckeye and what's explosion out there.
Yep.
I've been blown away that the #1 subdivision in all of Arizona is Tartesso. That's on the Sun Valley Parkway, past the 85. And then the #3 community is Sun City Festival, Sun City and Festival Ranch, up on top of the Sun Valley Parkway, and then Howard Hughes Corporation coming in and buying 30,000 acres of the Douglas Ranch and starting their first development that they're under construction right now for 3,000 acres, and they're going to be doing a great industrial up there. So watch for that area long term as well, and even short term. What's going to be happening, because that will all get filled in, and they have water, and they have the roads, and they have the infrastructure that's all there. I'm very optimistic for Arizona, Stacy, and I think that we will continue to beat the national markets. That being said, there's certain different types of things that can affect the entire nation, and the geopolitical issues and things like that could occur. So barring any of that, I think we're going to have a really predictable next few years going forward. It's not going to be this irrational exuberance that, you know, we've seen before. It's just going to be nice, predictable, and you know, and we can do very, very well. There's other, you're going to see some changes in the commercial markets. I expect to see with interest rates resetting, you know, when you buy a single family home, you get a 30-year mortgage. When you buy a commercial property, you get a 25-year amortization, but it's due in 5 years.
Right.
And so now you're going to have these interest rate resets from people that did their loans at 3.5% at in 2018 and 19. So we'll see some of that. You'll hear about some of that stress coming forward. As an investor, I see that as a great opportunity. But you know, I don't think we're going to see any kind of really bad thing, you know, that's occurring. And I'm very excited about the future. And I think we're going to see continued new home development and urban development. And I think we're going to see a little more urban development, you know, as well, when some of the great multifamily sites can't really afford to do it as multifamily, but they can afford to do it as condos. So the formula for condos right now works at this current moment. So anyway.
Well, and I could piggyback a little bit off of just from on the lending side. You know, we're seeing a lot of incentives for first-time home buyers, right? From everything from giving them a leg up in regards to minimum down payment options, but also interest rates. They're getting a better incentives in many cases than on a second home investment property, primary for somebody who has is not a first-time home buyer. So it's a great opportunity right now too for first-time household formations for young people that have not gotten into the market to jump in now. So right. It's exciting. It's an exciting time. It's a great time to be in real estate. Well, first and foremost, thank you both so much for taking time out of your busy schedules. This was so wonderful and such great information. I do want to take this opportunity also to thank our fabulous sponsors. Again, we couldn't do this without everybody helping and getting the word out and helping put this program together. So thank you all. And without anything else, Sarah, is there anything else I need to, from a housekeeping standpoint?
We do have one more question in the Q&A if we have just another minute.
Oh, I'm sorry, I missed it. Okay. Aside from extending the Prop 400, what other funding options, including government developer partnerships, that would be under discussion relative to planning, road travel, infrastructure? And is there a coordinating agency in place? Maybe this is more for Thomas. It's frustrating having roads rehabbed when torn up and a few months later completed projects. Rory, I will tell you that we'll probably be having somebody soon from ADOT or from the Maricopa Government Association of Governments, because that really is something that they really focus on. But Thomas, if you have any feedback.
Yeah, you're right. I think MAG and ADOT would be kind of the more appropriately prepared to answer that question. I know it is frustrating, but it's sometimes the cost of doing business of being in a growing city. So maybe the roads and the infrastructure is in place, but then a big employer or big residential unit goes in as well, and they need to upgrade the infrastructure. That's part of it. But yeah, MAG and they coordinate with all the local governments, because every individual city and municipality has their own transportation department. So they kind of serve as that overall overarching agency to try to help coordinate all of that. But
yeah, thank you for the feedback. I do think it would be timely to bring in somebody from MAG or ADOT or something, and also urban planning. So we'll work on getting somebody for our next event. We've got look for the announcement for the date and the presenters. Thank you everyone for attending today. We appreciate it, and have a fabulous day and enjoy the rest of your week. Thank you.
Thanks, everybody.
Thank you.